Hey traders, this is Blake Morrow with Traders Summit, and I have Bill Baruch from Blue Line Futures, president of Blue Line Futures. Happy New Year to you. Good to see you.
Thanks for having me on. Great to see you in this new year.
Yeah, it's always great to see you. I love actually having interviews with you. You're so knowledgeable. You're such a great trader, and you live and eat and breathe the markets like I do. That's what I love. So, hey, I had a few things that I wanted to talk to you about today in particular, because we're seeing a lot of movement right here at the beginning of the year. But I want to start off with crypto because I know you do have some crypto. You dabble a little bit in crypto. We see Bitcoin pivoting around the 4,000 level. What are your thoughts here?
Listen, I think there's a lot of value in here. 40,000 has been seen a little bit of people stepping in and defending it. I think some of the liquidation over the past couple sessions hasn't been heavy. I think it's been showing signs of stability. The weak hands maybe already flushed out. Personally, I've been in crypto. I do a lot with crypto. Today is on Tuesday, or Monday of first day of the week, started seeing this 40,000 area. Leaned in with some clients and just nibbled in some of these CME micro Bitcoin futures. But I think there's a lot of value across the space. Everything from a Solana to the metaverse focus with Decentraland and some other projects I've looked at too.
Awesome. All right. Well, I was wondering, from your point of view, if you had any clue on if you think we're going to break down here, or do you think we're going to actually have a tradable bounce? You're talking what, a 25% drop since Christmas holiday, somewhere around there, just in the last few weeks. So do you think it's tradable?
Yeah, I think there is. And we're back testing a trend line break from that high in April. And that was about 42,000 or so. So we're kind of flirting with that area, sticking our neck below it into the around 40,000. But when it comes down to it, like I said, I think the weak hands have already flushed out, and you're seeing some of the alternative coins. Solana kind of over the weekend take its latest leg and about $130. I own that and have been buying that a bit, and then into this weakness. And then I think that where you have institutions that are that's more sticky money. And I think there's a lot of opportunity in the metaverse or Web3. Decentraland, the ticker is MANA. That's one that I have. And you could buy virtual land through NFTs on there. And there's different things, like different projects that are getting launched, like one called Metaverse Mining Alliance that I'm invested in. And that's doing a full launch. I think it's February 1st. And that's a play to earn game where they have a guild, a team that is working to provide like battleships and materials within the game.
Wow.
And for players, because it can be expensive to get into the game itself, to be able to play to earn. So they're a guild that's putting all that together, and then it's a bunch of traders that are behind it, and they're hedging treasury risk and stuff. So I think there's a ton of really great projects out there. There's things that are sticky money, the institutions. This is what they're looking for. They're looking for yield opportunities within the space.
Well, you brought up another topic, and we've seen this huge rally in yields, right? We've seen this big rally in the 10-year. You take the 10-year bond, the 10-year bond that's actually testing levels, like a really big pivot that goes all the way back to 2017. And a lot of traders are talking, maybe we're getting close to peak Fed like hawkishness. And I know by the time people watch this interview, Fed Chairman Powell is going to be going through his testimony, or just after his testimony, people will be watching this. So it's not really fair to ask you about this. Like, what's he going to say? How are people going to respond? How the market's going to respond. But I did want to ask you, do you think that we are seeing peak Fed hawkishness at this point in time?
I think there's a rotating cycle of hawkishness that we're going to see. And, at the end of the day, they're going to seem hawkish at times and then less hawkish at times. That's how they're going to game the market. I've called this the Jekyll and Hyde effect. You're going to get very hawkish tones or very dovish tones in meetings, and then you'll see the opposite, or what feels the opposite in between the meetings and throughout these press conferences and whatnot. So where I think they are right now is as looking back at the taper, when that was being introduced, they really marinated the market to this taper and really defined the fact that the taper has nothing to do with the rate hike. Well, as soon as you start getting the taper, guess what happened? Then they started introducing rate hikes right afterwards. So right now it's about a 70% probability of a rate hike in March. You have another basically 25% probability to see a second rate hike in May. I mean, I'd say that's pretty darn hawkish right now. But the hawkishness really isn't coming from the rate hike so much as it's the balance sheet runoff. And that is really where the market is starting to get scared. So I think the same way they took the taper and then introduced the rate hikes is now they have the rate hikes and introducing the balance sheet runoff. I think they pull back a little bit on the balance sheet runoff and which allows them to press forward with the rate hikes. Still, I don't think they'll get 4 rate hikes this year, but I think it becomes highly likely we see 2 within the first half of the year, unless there's some more tectonic shifts within the risk environment.
Yeah, I was going to say maybe, if the market just kind of brushes it off, maybe they continue on. So you think it is going to be more market related? I mean, their decision making, they're definitely going to be watching the equity markets and how risk responds.
Absolutely. When they walk back the balance sheet runoff, I think you'll see risk on move, and that opens the door to those rate hikes.
Okay. All right. Well, that's fair enough. And it's going to be really interesting. And I like your approach. This means that we shouldn't trust anything that the Fed says moving forward. Just kidding.
Yeah. No. I mean, they've been. If you look back the great dot plot, I mean, they haven't been able to achieve those expectations ever. So right now you're looking at 3-4 rate hikes. I mean, I don't think they get there, but I think they're going to be quick to try and get 2 in the first half of this year, just to get themselves, lift off and give themselves some breathing room.
All right. Well, it's really interesting to talk to you about, the Fed, and it's going to be, I'm assuming the next few months is going to be a little volatile. And that's what we want as traders, right? We want to see a little bit of volatility. And this way it gives us some more opportunities. But let me ask you this, going into 2022, what are some of your ideas that you're thinking that you want to take advantage of going into the first month or two going into 2022? What are your thoughts?
Well, I mean, we were very prudent coming into the year. And it's something that I highlighted on time and again, through the last week of the holiday and even leading into that last week. Very bullish on risk assets and stocks, looking for that seasonal rally. But we kept writing, pinch yourself. This is holiday seasonality. The market is just in this melt up mode. And as we look into the calendar turns, you're going to start to see a focus shift back to the Fed, and that's going to scare markets. So now we're in this environment where the market is scared, and that should create opportunity. So I am remaining prudent on equities, but there are sectors that I like a lot, and we're very overweight on financials and energy, and we're picking up exposures. We're in line to slightly overweight in industrials and materials, and adding to that exposure. But again, I think that there's a lot of opportunity. Just not the equities necessarily. Is you look at the commodities. I tell you, I am a little nervous seeing the Barron's front page cover over the weekend, the commodity boom. But I do like commodities. And one of the reasons, looking at the currency markets, you see the dollar right now is sort of in this consolidation. But if you look at yields and the way that the euro, well, first, before I talk about the yields, the euro is building this pennant that does not look very good. And it could trade lower very easily. But one of the things that I think is very interesting is you have the German 10-year moving near 0%. And listen, I think if we get above 0, you're going to start to see some money flows back into Europe from the dollar. And I think that could be a tailwind to the euro when it looks the worst technically. And I think that could open the door for some commodities. And one thing too, I think it opens the door for gold big time, because it then can make gold a more of an inflation hedge. If that dynamic plays out on the currency side, then you're less, it could really become gold hedging inflation, since the fact that the dollar isn't always going to be rallying when inflation's hot, the euro could have a bit underneath of it too. And on top of that, I think with gold, you have managed money net longs very, very underpositioned here. And if gold starts to boogie, then you're going to see flows really chase gold higher. And I think this could be gold's year, but we need, we really either need rates to stop going higher on their own account, or the dollar to sell off because of rates.
And the thing about gold, I think people, me personally, I hear a lot of people talking about gold, a lot of gold bulls that I've had discussions with over the last 3 or 4 months. And people are obviously disappointed with inflation expectations where they are, inflation moving where it's at, that we haven't seen gold respond. But I think people forget that gold, just a year and a half ago, we were trading much lower and we went to all-time highs last year. So, and we're consolidating not too far off of those highs.
Yeah, we're consolidating very well. One of the things that we give clients when we sit down with them, and especially more on the wealth management side, is an asset quilt. And we look back over a decade in the asset quilt, which is kind of it's a sort of a heat map, if you will, color coded, where you can see, which assets have performed over the years, and then which assets have performed the best over the last decade. And gold, it's coming into last year, before the start of last year, obviously gold underperformed big time and had a bad year last year. But coming into last year, gold was the top performer. I mean, and this is outside of cryptocurrencies, of course, but gold did what it was supposed to do. It led that inflation narrative higher. It performed in 2020. And, if you were greedy on it and you kept pressing it higher, then unfortunately you've lost out. But it did what it was supposed to do. Once we kind of got through the fear and the need for the safe haven, then there were other opportunities. You move out of gold and look what energies did. Look what the stock market did, and look what other commodities did. Look at coffee. There's a number of opportunities out there. But if you continue to press gold and didn't take gold for what it was, you are very disappointed right now.
Yeah, gosh, great point, Bill. Well, Bill, I want to say, Happy New Year to you. And it's so nice to hear from you. And it feels like it's been forever, but I know it hasn't. And I think this has been a really great discussion, learning a little bit about your ideas and, how you feel about gold and about cryptos and about the Fed moving forward. All great information for our traders. But if they want to find out more, because they may see some of your interviews and maybe some of your videos on the Traders Summit site, how can they find you directly?
Yeah, visit our website, bluelinefutures.com. And, on there, we do have a research. You can check out the stuff that we post, but there will be a prompt on one point there that hits you. And you can also find it throughout the website. Just put your information in. You can sign up for a free trial of our research. It's 14 days. And someone from our team will contact you. And our number's on there too. Just give us a shot. We have a whole team here, trade desk, as well as sales support. And, we kind of find the best fit for you with what you're looking to do. So check us out, bluelinefutures.com. And thanks a lot for having me.
Hey, thanks for being here, Bill. Happy New Year to you and your family. And I look forward to the next time that we get to speak.
Thank you too. Thank you.
All right.
You too.
Have a great one.
Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.